level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Hello and welcome. You're watching First Take here on News 9, where we bring to you the morning buzz on Dalal Street. I am Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Tuesday morning, and we are back after a gap of 3 days. And by the way, this is the final week of financial year 2024, and it's a short one at that. We just have 3 trading sessions this week. Friday is a holiday on account of Good Friday, and we have a bunch of expiries lined up. Remember, later this week it will be the expiry for Nifty financial year March contract expiry, and we have today financial services expiry as well. But we'll talk about it in just more in just a bit. Let's look at the global cues, because there is a bit of vacuum there. We have 2 days worth of market action to react to. Amit, fill us in please.
Yeah, it's good morning, Suyash. It is red in the west today. Dow Jones closed in the negative at 0.41%. S&P 500 at 0.31% in the negative, Nasdaq in the negative at 0.27%. Even Apple closed in the negative, which is mostly a cushion for the for Wall Street, at negative 0.83%. Tesla, however, was in the positive, so was Nvidia. Coming to the European markets, they closed slightly in the positive at 0.04%. Hang Seng this morning, coming to the Asian markets, has been in the negative slightly at 0.07%. Nikkei, however, is in the positive today at 0.03%.
All
so
right.
a mixed bag, but the West is mostly in the red.
I mean, considering the kind of rally that we have seen on Wall Street, I think Monday's session was more about taking a breather, because all in all, the indices are up for the week and they have been, rallying for the longest of time.
Yes.
And I think also one of the factors why we are seeing some bit of a profit taking take place is because an important inflation data comes out on Friday, right? That would be a holiday for us and for the US markets as well. So we will only get to react to when Monday comes. But that will be a very important, cue for us to track to, because remember that will play part in what the Fed does next, because this time around the Fed has maintained a status quo as far as the interest rate goes, but the commentary coming in from Mr. Jerome Powell has turned slightly dovish. They are talking about 3 rate cuts later this year, and a lot of us are expecting the first rate cut to happen in June. We have a policy meet in May as well. So if inflation data, because remember, inflation data in the month of January and February was slightly hotter for the US, and because of that, there was a lot of expectations that the rate cut, the first rate cut would get pushed to a later date, maybe after June even, by some some analysts and experts out there. But Mr. Powell, he pretty much said that we look as the hotter than inflation data that came out for the month of January and February as just a bump in the road, and as long as the inflation continues to taper off nicely, especially the core inflation, the expectation is that Fed will go with 3 rate cuts later this year. But coming back to Indian markets, we saw very good recovery in the latter half of last week. In fact, we ended the week in the positive. Nifty was up somewhere around 0.33%. The small and the mid caps also were able to end in the green. But this morning, a little bit of choppiness has set in. Nifty is very close to that 22,000 support. So far, we have actually held above that 50-day moving average, which currently sits about 21,950 levels. But that will be a key level for us to track going forward. But so far, it's been a weak start to the week, a short week at that, and we are down about 0.33%, as you can see on your screen. The broader markets, they are also trading slightly mixed. The small cap index is down 0.5% almost, but the mid cap index, we have seen good bit of stability come in for the mid cap index last week, and even this morning. It's the only segment of the market that's actually in the positive, although it's just up marginally by about 0.07%, and that is as of 9:45 a.m. this morning. And volatility, remember, it's a short week, and we have the monthly March series expiry later this week on Thursday, so expect a little bit of choppiness in the market. But India VIX at 13, I think it's not concerning. We have spent a lot of time in that 15-16 odd zone. Last week we had slipped to around that 12 sort of area, but this morning a 6.6% spike on India VIX, that ought to keep investors on the edge. But to get views on the market and what to expect pretty much, let's also bring on board Ms. Avni Bhatt, Senior Vice President at JM Financial. Thank you for joining us here on News 9, Avni. Season greetings to you and your family and everyone at JM Financial. And we are in the final week of financial year 2024, and despite all this talk of a market correction, the market staged a very strong recovery late last week. Nifty gained about 400 points from the very recent low of about 21,710, and the 50 DMA, I mean, that has emerged as a strong support in all this time. Where do we go from now, Avni? I mean, do we consolidate, or will the we continue on this path of recovery?
Good morning, Suresh and Amit, and regards for the festive season, and a very good morning to all the viewers as well. Yes, so last week what we saw was a selling climax for both the indices Nifty and Bank Nifty, and then last 2 days we saw a very sharp recovery, which was due because coming to the March end, which is not just the monthly end, it's the quarterly end and the financial year end. And the obvious reasons are that mutual funds will try to, jack up the NAV for the NAV purpose. They'll keep the markets at least afloat. Maybe not rise higher, but at least they will not allow the markets to fall down. And to support that, even the options data that we saw, the built up in open interest, there was a huge open interest built up at 22,000 put. for the March series, and unwinding was seen in 22,000 call. So now the OIPCR for this particular strike is above 2, which is a very good sign that put writers are back in action. India VIX also went down below 13%. So stability is gradually creeping into the system. And I don't think we are looking at any major downsides, at least for this next 3 days in the holiday shortened week. So 21,900 to 22,000 is a major support area which should hold. And on the upside, I think for in next coming 2 days, 21,200 is the crucial resistance. That was last week's high also. And if at all in next 2 days, if we Nifty manages to cross 22,200 level, then we may probably head towards 22,450 to 500 in this month itself. So that's a pretty bold call that I'm taking. But yes, level wise, 22,200 is a very crucial level that needs to be crossed. Only then we'll see the upside momentum for up to around 22,500 levels. And similarly on Bank Nifty also, it is yet stuck in a range of 46,000 to 47,000. But the good thing is that there's a huge amount of put writing that has picked up at 46,500 strike. So I think the immediate trading support level is at 46,500. And for this entire bullish setup that has set in last 2 days, I think 46,000 is a crucial support level. Which in case if it closes below that, then the entire setup is negated. We believe, I think on the upside, 47,300, which was last week's high, as well as the breakdown point, from where we saw a huge correction. If that level is crossed, then we should be heading towards 47,800 to 48,000 levels. So the bias has to be kept positive, at least for this particular series. And moreover on Bank Nifty this time, because Bank Nifty has already picked up a huge amount of rollovers. So that's a very good sign that rally anytime soon.
Good morning, Abni. I'll drive your attention to Mankind Pharma. Now, Beige Limited, which is an affiliate of Chris Capital, is offloading 2.9% of its stake in the company at a price range of 2,103 and 2,214, which is more or less around the price that the stock is trading at this point. It is at 2,150, so a slight discount. Now, the stock itself has been down today. What do you see as the reason for this, despite the sale?
Amit, what I can see on the charts is since last almost 2 months, if you look at the weekly charts, it has been consolidating. It's moving in a narrow band of 2065 on the downside and around 2200 to 2250 levels on the upside. So today also I think it tested 2273 levels, and then we are looking at the selling pressure. So keeping aside any kind of news flow, if you only look at the chart structure, then I think technically it is still trading in that range, in that narrow band, and on the higher side it is facing some selling pressure. So I think it requires a lot of volume activity to pick up further to break out of this range. And on the downside, I think 2120 is where the 50-day exponential moving average is. And as you mentioned, the stake sale band is also around the same levels. So in the coming few days, it should be trading in this range of 2100 to 2250 on the upside. No signs of any breakdown or breakout as yet.
All right, and another stock we wanted to pick your brains on is Avenue Supermarts. I mean, the stock has done phenomenally well in the last 6 days. So on a 6-day winning run, it's up almost 14% in that time period. And even this morning, Avni, it's up over 4%. And Avenue Supermarts is one stock that had been in this long, period of consolidation. I think it has not delivered much in the last couple of years, but we are seeing a breakout finally. And volumes are also good in the cash segment. I mean, of course, that happened on the back of CLSA initiating coverage on the stock with a buy target. and a target price of I think that's a target price of 5,107. That's about a 20-25% upside from current levels. What's your take, Avni, over here? Avenue Supermarts, is it finally on the verge of a breakout, or in fact, I mean, it looks like it has broken out?
Yes, Suyash. So in the first place, I would like to give the disclaimer that we had initiated this stock last week around the 4240 levels, and today we have booked out profit on this particular stock. But going purely by the chart readings, it has formed a very nice rounding bottom on the weekly charts, and the breakout point was 4240, from where it has rallied. Now the immediate resistance is around 4595 levels. So although our targets were met and we booked out profit, but if someone is holding, I think the upsides for the immediate term also looks up to around 4595 to 4600 levels. And on a positional basis, it has formed a nice rounding bottom, for which the targets on the upside come to somewhere around 5500. But that's going to take a little while. You need to give at least 3 to 6 months for these targets. From trading perspective, I think one should book out profits here and re-enter on dips.
And what are your picks for our investors today?
Now, keeping aside all the frontline counters, which I think the entire market community is chasing, there are 4 stocks that I would go with. The first is Granules. So Granules, one can enter in the range of around 430 for a target of 455, and keeping a stop loss of 415. The second counter is MGL. So MGL has consolidated. It saw a huge correction and then it has consolidated for a long time, and now it is again looking up. So MGL in the range of 1320 to 1340 becomes a good buy. You'll need to give some time to this particular stock. It's not a very short-term trading stock. So keep in mind at least 15 to 20 days, and for a target of 1435 on the upside, and stop loss of 1285. The other stock is HDFC Life. I think we had initiated last week also. It did test close to our targets, and then it again saw some correction in the last week. The entry range is 620 to 623. I believe the stock has already moved up today. So one can wait for the dips up to 620 to 623 levels. On the upside, the targets are 645 and 652, and the stop loss can be kept at 608. And the fourth stock is a little ignored stock, I mean, which has been facing a lot of pressure, but I think the downside correction is done. It is Hind Unilever, HUL. So HUL, I think the downside correction is completed. It has retraced back the entire rally that it had seen earlier. And now from here on, it may probably consolidate for a few days and then move up again. So 2250 is somewhere one can enter into the stock for a target of 2320 and 2375 on the upside. And stop loss can be kept at 2210.
All right, Hindustan Unilever, Mahanagar Gas, Granules, among the top trading ideas from Avni Bhatt. Ma'am, thank you for joining us on News 9. Always a pleasure speaking with you. But with that, let's slip into a short break. On the other side, Gaurang Shah, Senior Vice President at Geojet Financial Services, and Mohit Gang, Co-founder and CEO at Moneyfront, joins us.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me.
When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
The winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You are watching First Take here on News 9, and the markets, they are pretty much holding above that 20,000 levels, but we are not recovering much. But the headliners, while they are struggling, the broader markets, the story is different over there. The mid-cap index is actually moving higher as we speak. It's very close to its day's high, up 0.3%, and this is as of 10:15 a.m. this morning. And the small-cap index, remember, in the opening trade, it was the weakest segment of the market. It was down about 0.5% or so, but we have recovered from those levels, and 15,000 has been reclaimed. But I'm looking at India VIX, a spike of 6% on a day-on-day basis. That's a little too much, but remember, we have spent a lot of time in that 15-16 zones. 12.97, 13 odd levels is not something that we need to worry about, but this will be a shorter week. We just have 3 trading sessions this week, and Friday is off, of course, on account of Easter holidays. And we have a bunch of expiries lined up. March FNO series expiry is on Thursday. Today we have financial services contract expiry. So keep an eye out on volatility, because that could be a problem. Any expansion over there could really impact the option prices. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services, and Mohit Gang, Founder and CEO at Moneyfront. Thank you for joining us here on News 9, gentlemen. Season greetings to you, your families, and your team. Gaurang, I'll start with you first. I mean, final week of FY 2024, and quite a year it has been for our markets. What were the highlights for you for this year, both positively and negatively, sir?
Thank you, Shwesh, and colorful greetings to you, your entire team, and all your viewers from myself and my company, Geojit Financial Services. Eventful, yes, it has been. Geopolitical situation has been at the forefront. Along with that, disruption in the global supply. Yesterday or day before, we had Ukraine attacking Russia's oil refining capabilities and capacities. That made crude oil bounce to more than higher level of comfort zone. And my sense is that despite all the negativities, Suyash, we have been able to maintain ourselves on the positive side, and we've been able to recoup from all those global and local negativities which impact economy and stock markets. So it's good to see this positivity and strength and capability to bounce back from any kind of external or internal negative impact. Short week, as you rightly mentioned, but it's going to be a powerful, power-packed week because of the weekly and monthly expiry on the FNO front. And I guess starting second weekend or possibly first or second week of April 2024, next month, we will have the fourth and the final quarter earnings for this financial year. Let's hope there is a better story over there and a better color to see in terms of progress that we make. And overall, I think this choppiness and volatility is going to be there till the time we see elections done and dusted, which is the second longest one post-independent India.
Right, but Mohit, I'll come to you now. The earnings season is also upon us, and the first in the pipeline, as always, will be the IT companies, and they have had a tough time. Last week the trigger, of course, was that Accenture downgrade that happened. They have downgraded their forecast, and the last time that I remember it happened, it was bad news for the IT companies. Now we have already seen a knee-jerk reaction on Friday. Is the pain likely to continue? And more importantly, what are your expectations from the Q4 print of the bellwether IT companies, Mohit?
Hi, Suyash and Amit. Always a pleasure to be on the show. Wish you and everyone of your viewers a very, very happy Holi. And we are nearing the end of this financial year, which has been a fantastic financial year for the stock market participants and for everyone who has participated in the equity markets in India. On the IT front, Suyash, honestly, I think Accenture guidance came out of the blue. Market wasn't expecting or anticipating this kind of a harsh guidance. they've cut the guidance very sharply, only 1 to 3% growth as compared to a 2 to 5% which was projected earlier. And the reasons which they've cited is global uncertainty and perhaps clients' demands not picking up and so on and so forth, which doesn't augur well for the bellwether IT stocks. And markets have already taken that into cognizance. The IT index is down almost 3.5% since the time the Accenture news came in. Prior to that, if you see last year, IT stock was actually one of the big laggards, in fact, for last 2 years. And only for last 3-6 months, IT stock, IT index was actually picking up some steam, right? Which was more in anticipation of rate cuts coming into US sooner than what markets was expecting. There was an anticipation that the IT demand will pick up with the yields easing off. There was also an anticipation that IT companies have already bottomed out and perhaps the worst was already in the pricing. With the Accenture guidance coming out, I think that fear has already again popped out of the can. To my mind, only the earnings season and the kind of earnings which domestic Indian companies will post out will assuage investors' fear out there. My sense is earnings on the Indian IT pack won't be as bad as the Accenture earnings forecast which came out in the US. To be honest, I think a few of the bigger IT companies have already baked in the worst of the scenarios last year and couple of quarters back. And my sense is the season this time will be more centered around some big deal announcements, some vertical expansions of these companies, so on and so forth. So I am not as bearish on the entire IT pack as it looks like. I think the worst has already been taken into account. The pack has been hammered. For value investors out there, for someone who really wants to take a slightly longish view, look, it's not a bet for another 3 months or 6 months. It's a bet for another year or two. If one is willing to put out money, I think they're all very reasonable priced. And I've often said in your show, these are very good allocators of capital, all these IT companies, and they have the wherewithal to fight the tide, right? So my sense is the pack should pick up. The earnings season should not be as bad as what has come out in the Accenture guidance. And that should be a bit of a positive surprise for the market.
All right. I mean, Gaurang, Mohit over here is expecting a slightly better quarter for the IT companies. It looks like he's saying that the worst is over. And I mean, we were reading about a lot of commentaries, brokerage commentaries. FY24 was pretty much declared to be a washout year. FY25, at least from what we are hearing from Accenture, it looks like, that difficulty is going to persist from here on. But I mean, the valuations, sir, they ought to be looking compelling at this point.
So, Shreyas, I think as a brokerage house, we at Geojit have been positive on IT for a pretty long time. Even last 2 years, if you go to see when a lot of participants in the market were underweight on IT, we remained positive. See, short-term issues with respect to local and global events unfolding will have its impact on any sector, let's face it. Why only IT? But does that mean that you have to change your entire theory of long-term investment? In case if you have IT stocks in your portfolio, then we don't think it is warranted. And in fact, we had given out an add and accumulate call to all our investors who had invested in IT at higher levels to get into IT stocks likes of TCS, Infosys, HCL Tech, Tech Mahindra, LTI Mindtree, Cyient Limited, KPIT Tech, Tata LXI, to name a few. And from those levels, I think they have done reasonably well in case if you would have gotten at those levels, or you would have averaged in case if you bought it at higher levels. Then fourth quarter historically, is a little bit of mixed bag. Not that third quarter was not, because in third quarter we also saw some of the mid-cap ITs which were otherwise giving stellar performance compared to large-cap IT names did underperform. So it's, seasonality, I would say. If you don't have 3 months, 6 months kind of time horizon, I think even after the kind of recovery that we've seen in some of the IT stocks, it still warrants a second look and an investment. And I'm sure that this global headwinds that we talk about in terms of budgetary cuts, discretionary spends, will definitely be a thing of past, because in today's complex world, Suyash, the kind of cyber security you need, you can't stay away from upgrading your IT platform.
All right, that's the word coming in on IT companies. Both our guests expect, bullishness to set in for the IT companies. Maybe the worst is over. Q4 may be tough, seasonality impact could be there. But gentlemen, please stay with us. We'll slip into a short break and we'll be right back with you.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rumors should not be only on the platform. We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Welcome back. You're watching First Take here on News 9, and let's talk markets because 22,000 is what we are holding on Nifty, and pretty much we are trading flat over there. 22,000 has been protected, but I mean, how long can we hold it in a time, when volatility is spiking so sharply on a day-on-day basis? India VIX is up 5%, 22,000. Keep an eye out on that. If we break below that, there will be small support areas, but that could be a crucial psychological support level for us to track in today's session and going forward as well. But I mean, let's talk broader markets because they were able to recover in the latter half of last week. Both indices ended on the positive note, and we are seeing some signs of stability taking place in the mid-cap space specifically. It's the strongest segment of the market this morning. It's up 0.3%, and the small-cap index also, despite opening with a 0.5% cut, we have recovered from the day's low. 15,000 is where we are at on the small-cap index. But we have a lot going in the markets. We are coming back after a long weekend. And it was not just Holi. The IPL season is back, and Amit, I know you're a big fan of cricket, me not so much. But I was watching one of these matches, and they have that viewership number. 16 crore people were watching IPL at one point in time. I mean, that's about 10% of the entire population, right?
The numbers are huge. IPL is back and the numbers have gone through the roof. They have not just surged. 51% jump in the first day viewership of Jio Cinema digital platform. 59 crore video views on the platform on the very first day. 660 crore minutes of video time on the digital platform witnessed on the very first game between the teams of Dhoni and Virat Kohli.
That's just one match.
That's just one match. I'm talking about the first match. On the very first night, the platform has the free play and win, predict and win sort of a game. And there was a viewer on the very first night won gold of 50 lakhs. Gold worth 50 lakhs of rupees. If I can throw that question on to Mohit. Mohit, if you are still there.
I'm there pretty much.
Yeah. Good morning, Mohit. So this is a time when most companies open their purses when it comes to their marketing and advertising spends. Which are the sectors you predict will be the biggest gainers from this IPL season, considering that this time the elections are also, election season is also going on simultaneously?
Thank you, Amit. Look, I think IPL, if not the biggest, is one of the biggest religions in India, honestly. And I think the cricket fever is too huge that you and I can possibly assess on this show itself. My sense is IPL is going into the footsteps of English Premier League or the NFL League in US. And pretty soon we will see, if not maybe I think next 2, 3, 5 years is when we will see IPL surging past one of these leagues, which are perhaps the biggest and most iconic globally, right? With a valuation of almost 10 to 11 billion, this IPL is supposed to surpass all records, as you rightly pointed out, Amit. There are many sectors, there are many things at play when you call off an event of such large scale, which will span almost across 3 odd months, right? And this is a record season, the longest ever, because of elections also coming in. Overall, the combined impact of elections and IPL, my sense is, will give a massive boost to consumption across the length and breadth of the country. Honestly, sectors which will see positive impact, I think perhaps are FMCG companies, the larger players out here like the Livers and the ITCs of the world. Even the smaller QSR companies should see some demand pick up out there. Companies like Varun Beverages and all those stocks which are perhaps listed plays on cold drinks and mineral water and so on and so forth. I think those are all, and there are multiple of such plays which are out there. I also find the listed IPL space very attractive, Suyash and Amit, which is very limited in India. You have only 3 listed plays. You had India Cements before, but it's now no longer listed, as in the Chennai Super Kings franchise has been removed from that. But there are 3 listed plays in the country right now. You have the Royal Challengers Bangalore franchise, which is United Breweries. You have Sun TV, which owns Sunrisers Hyderabad, and you have RPSG Group, which owns Lucknow Super Giants. So my sense is these 3 are very interesting play, and if one has to actually track the significance of IPL growing in this country, you have to track through these 3 stocks, though it's not a complete play, but yeah, in a very large way, these are 3 very significant plays which are related to IPL.
Thank you, Mohit. You mentioned FMCG, and I'd throw this question to Gaurang. Looking at the FMCG stocks in the last 5 days, the enthusiasm does not seem to have rubbed off, whether it is HUL, even Varun Beverages is in the negative last 5 days, Dabur, Godrej Consumers, Tata Consumers, it is Tata IPL. What do you, according to you, do you see the reason of the enthusiasm not rubbing off onto the scripts in the stock markets? Is it the elections, or have they already maxed out in the bull rally that happened over the last 1 year? Also, I'll add one thing to that. We had done something, a study last week, where the FMCG stock and the metal stocks, Nifty Metal and Nifty FMCG, was trading below their 200-day weighted moving averages. So what do you see the reason why the FMCG, which should be basically soaring right now, enthusiasm not so much, at least on the stock prices? Gaurang.
So, Amit, on the metal front, I think post the data that we had from China, we had exuberance in the metals pack. And as we all know, more than locally, I think metal sector is driven by global news flows, especially what we hear from China. And of course, what happens in the commodity market as far as ferrous and non-ferrous metals are concerned. Elections definitely has its impact on metal sector as well as FMCG. More so on the metals pack because infrastructure activity slows down till the time we have election done and dusted and a new government in place. And there again, spending on infrastructure creation starts, cement and metals consumption go up. Real estate sector also has a larger contribution to the consumption of metals and cement, and so does private capex. So and of course, we've had issues with the input cost also as far as numbers were concerned for the metal pack, but that have kind of eased off a little bit and margins have improved a little bit. So we remain positive on Tata Steel, Hindalco, JSPL and JSW Steel. On the FMCG pack, let us not forget the third quarter earnings was after the erratic monsoon. And we all know what the monsoon was like last year. Excess in some parts, just about normal in some parts, and below deficit in some of the important states, which contributes larger to the agri production. And we had an impact. We had palm oil prices from Thailand jumping up to multi-month high. We have issues related to the crude oil prices, which is inched up above $86 on the Brent, $82 on the NYMEX. That has its impact. But even on the FMCG pack, notwithstanding this short to medium term issues, as a brokerage house, we remain positive. ITC, HUL, Tata Consumer, Godrej Consumer, Dabur, Marico, Imami, Nestle, Britannia, if I remember few names. And these are the fundamental coverage that we have. And not to forget, India was, is, and will remain a consumption-driven economy.
All right, that's the word on metals and your FMCG. But Mohit, another segment of the market that is buzzing, of course, and it will be buzzing this week is the primary markets. The 130 crore IPO of SRM Contractors has opened for subscription today. The price band has been set as 200 to 210 per equity share. And I'm looking at the offer. It's exclusively a fresh issue. I think this, in my opinion, is important to note because all the proceeds from the IPO will go to the company and not existing shareholders. And even looking at the financials, Mohit, the company has successfully demonstrated consistent growth in both revenue and profits over the past few years. Sure, FY23 was a little difficult, but December print was quite impressive actually. With all this in mind, I know you are very cautious when it comes to recommending IPOs. Is this an IPO on your radar, sir?
Hi Suyash. Look, honestly, I think it's a very interesting play. I'll not mince my words. I also, the way you mentioned, I also like IPOs where the entire proceeds is going for business expansion. I particularly like those kind of IPOs coming out where it is not an OFS and it's a complete book build process where the proceeds will go in newer contracts, improving the working capital cycle, repayment of some debt and other general activities. So I think it's a good, interesting thing from that point. On the business per se, honestly, it's a very, very niche and a very good play on, look, so they do nothing very unique. They are into construction of whatever roads, highways, tunnels, and those kind of things. But they are very focused on the Union Territory of Jammu and Kashmir and Ladakh region. And they have a very specialized cell which caters to those difficult terrains where they kind of do some tunneling work, reconstruction of bridges and those difficult roads, navigation systems and other kind of things. So it's a very, very unique and a very territory specific play, right? And they kind of, I would not say monopolize that segment out there, but in that terrain, they are very well known and their capacity, the capability is very well defined out there. The company has been steadily growing. Honestly, I would have been happier to see higher growth numbers though. But in terms of valuations, also the IPO looks fairly attractive. I think post post the IPO, the valuation should not be beyond around 18 times multiple, right? Which to my mind is good, and compared to the peer group, it will be fairly cheap also. My sense is this is one which people can subscribe. Even from a short-term play perspective, it should give good listing gains, and it should also be a good long-term play, given the hectic activity which we have seen in the border region, the focus of the governments in those areas, especially in the region of Jammu and Kashmir and Ladakh. Government is extremely focused to do some development activities, to build newer roads, tunnels, and all those kind of things. So my sense is this is a good long-term play.
Okay, now Gaurang, this is the end of the year. It has been a volatile year. The bulls have basically dominated. We had a correction few weeks back. How do you see the coming year for the investors, and what is your advice for them right now?
It's a very difficult make, given the fact that you are in an election year. And very close to it, 19th of April will be the kickstart of first phase. 1st of June, we'll see the end of it. 4th of June, we'll see the outcome of that election. So, and as always, have been positive on the markets. And what we've advised to our clients over the last couple of months is that don't look at the volatility in the market because it's going to be at an elevated level. And I've always maintained one thing that, bro, if you're coming to the stock market, be prepared to digest the high risk that the market will throw at you. If you don't have the capability of digesting that high risk, then don't come to the stock market. But I think I'll pencil down in terms of returns on the index, a conservative 12 to 15% return on Sensex and Nifty for calendar year end December 2024. We might do good in case if the result outcome is favorable according to the thought process what the markets would like to have. And possibly you will see the momentum pick up in the second half once we have a decisive government in place and with the right numbers. Earnings will be very supportive is what our calculation is. And all those FIs and investment officers who have not yet come to the stock market in terms of India emerging market will want to bring in lock, stock and barrel. Who are already here, they will try to bring in more. And the retail participation, Amit, is my assumption is that we will not need to look at those FI flows because we've seen a steady growth as far as retail participation is concerned, whether it is directly into equity market or via mutual fund SIPs or lump sum investments. And this number, my anticipation is going to grow considerably at a higher level.
All right, Amit, got to get you doing some crystal ball gazing out there, Gaurang. But talking about FIs, actually they are back and they are back in a big way. 38,000 crores they have pumped up in the markets this year, this month actually. And a lot of it has to do with the block deals. But as you said, better late than never. On that note, thank you, gentlemen. Thank you for giving us time on News 9. Appreciate your thoughts, appreciate your time. All right, before we wrap things up, let's just quickly look at how the markets are doing because Nifty is holding 22,000 and that has emerged as a crucial support. We have not seen much movement on the upside. We have moved up slightly. We were at around 20,009 sort of levels, but currently about 15 points higher from it. But nothing major, nothing consequential. The broader markets, although they are recovering, the mid-cap index is up almost 0.4% as we speak. It's near its day's high and moving higher. The small cap index has also, pretty much cut down all the losses. It was down 0.5% in the morning trade. Currently, it's almost flat, down about 0.04% at 15,050 levels. And volatility, although it is elevated on a day-on-day basis, it has come down from the morning trade. It was around up 6% or so, 6.5% or so. Currently it's slipped below 13 levels and up 4.66% as we speak. But remember, it is a short week. There will be a lot to track, and the volatility is something that we need to keep an eye out on because of the bunch of expiries. Also, we have inflation data later this week on Friday. Actually, we'll only get to react to that on Monday, and that is for the US. But a lot of it has to do with how the rate cut, the monetary easing cycle is going for the central banks. But on that note, we leave you, and but We'll see you at 4 p.m. Up next is World Business Report.